Hey everyone, welcome to Breakout Wednesday for Feb 5, 2020. It's about 3 p.m. Sydney time. Now here is a chart of the Nasdaq. Once again, is at all-time highs, shrugged off the coronavirus stuff and just kind of got on with it. Now, a chart of the All Ords, we've had this pullback to support level. We've pierced the 20-day moving average. It's obviously weaker than the Nasdaq chart. However, it's hardly a deep pullback. The uptrend's still in place. And it's just a matter of kind of, managing individual trades and not stressing or thinking too much about this index as far as I'm concerned. Now, today I'm just going to have a look at the bigger picture side of things in terms of commodities and ETFs and where the money's flowing in and out of, to help me try and figure out where I want my trades to be, where I want my long-term investments to be at this point in time, all that sort of stuff. And then I'll get to some individual setups at the end. So first of all, let's just look at a few ETFs. So tech, the big technology ETF and ASX is new all-time highs. It didn't really even pull back during that coronavirus stuff. I mean, it went to its 10-day moving average a few times and then just bounced off it. Ridiculously strong, and there's just so much money right now being flung around in the software and technology spaces. So here's Hack, it's a global cybersecurity ETF. Once again, all-time highs. I'm long both tech and Hack. No plans to ever sell them anytime soon, at least. Moat ETF that tracks some of the huge American companies, all-time highs again. And let's just have a flick at the only Asian related ETF I track, and ASIA Asia, obviously. It had a deeper pullback right to its 50-day moving average, but it really isn't that big a pullback. Maybe it's got more to pull back, who knows. But I think with the amount of headlines and social media stuff that we saw about coronavirus and all the fear that was out there for a short amount of time, it's just the damage hasn't really been done to these ETFs and indexes. I guess some individual stocks have been hammered, but when you look at the indexes and the ETFs, it's this is a pretty lame retracement, and correction. So moving on, QRE. QRE obviously is a big resource stock in ASX, and it's fallen to its 200-day. It's weaker than the Asian ETF, and this thing's been going more or less sideways for years and years now. The technology software ETS has been going up and up and up and up. And let's just have a look at a weekly chart here. Obviously, it's in the long term. It's gone up a lot since this low here on 2016, but if we just look, between May 2018 and now, it's really just been chopping away. Anyway, it's interesting. It's had a deep pullback, and I'll run through some of the individual commodities in a sec. But for me, I'd like to, if I'm going to invest in this, I would like to see a massive pullback, and that would be, it needs to fling under its 200-day. I just, for this particular ETF, I don't want it at its 200-day. I want it where this box is down here at 5.9, around there. If it ever gets to that during this correction, great, I'll get some. If it doesn't, I couldn't care less. I mean, I'd prefer to have my money sitting in tech and software stocks anyway. So, okay, now just a few individual stocks which are kind of huge global companies, kind of even more relevant than some ETFs really, to get a big look at the bigger picture. Nike's announced it's closed down some stores in China. Some of its factories have shut down temporarily, yet it's only a few bucks off its all-time high. I just think that in a strong tape, in a strong market, we have bad news and the market shrugs it off. I think that there's just so much strength out there in these trends, in these mega trends. Okay. AEF is an Aussie company I like to track. It's just one of these stocks / ETFs / investment vehicles where people who wish to invest in more ethical means and away from fossil fuels have somewhere to place their money. And I track this. This has been one hell of a good uptrend, and it's had a pretty deep pullback. But I guess more to the point, if we look at Tesla, this has been one of the best moves that I've seen in ages. It's up there with some of the weed stocks, the moves that happened with weed stocks last year, and with the Bitcoin's cryptocurrency stocks in 2017, and some of the weed stocks in 2017, and then obviously they set up again in 2018-19. Okay, and so Tesla, it's more to me than just a car company. I think to the investment world, it's more than just a car company. There hasn't really been that many hugely successful, say, solar power companies or renewable energy companies, and Tesla represents that for people, investment companies and individuals who wish to invest in something that's going green and taking on big oil and disrupting the world as we know it. Tesla stands for that. This is one hell of a move, and I'm gonna, hopefully this thing can consolidate a lot in base for 3 or 4 months before pushing higher. So I think Tesla is fascinating to watch it all unfold with Elon Musk and all that sort of stuff. Okay, so moving on from that, commodities. I'm just going to run through a few different commodities just to see where it's at. This is some nickel's futures. This is all weekly charts, right? So nickel has been getting absolutely hammered for ages now. Okay, let's just flick to gold. Okay, gold is in an uptrend. It's well above its 200-day moving average. And it's bullish. Okay, let's just look at get rid of that. Let's just look at oil. Okay, that is, I meant to bring up a chart of Brent, but anyway, this is the same more or less. So it's been getting hammered by the coronavirus crisis, but the oil charts have not been overly bullish for a long time now. I'll try and actually just get up the Brent if I can find it. Okay, so here's the proper oil chart, guys. Here's but this is a weekly chart, remember, so it's been going sideways / nowhere for ages, and to me, oil and oil stocks is just not on my radar. And unless this thing based and started trending up above its key moving averages, and for me, it's just if I'm going to be anything, this stuff is going to be shorted. Definitely not long. So anyway, that's just my opinion. So let's just move on to copper. Okay, I'll just try and find a continuous contract there. So copper has been going sideways for ages, a bit like oil. This is a weekly chart, and it's just there's just nothing bullish about that. Okay, so so that just gives us a bigger picture look. And so what do I get from all that? I get that the money is going into stocks like Tesla. It's going into all the software stocks, all the software ETFs, the huge American companies like Google. In Australia, I mean, we're having a lot of our information tech stocks setting up. Afterpay is reaching new all-time highs, and Zip, all these companies that have been going up for ages are still looking strong. Okay, I talked about last week, APX is setting up. It's another infotech company, and this is one of the setups I'm watching currently. If we look on a weekly chart, it looks nice. It's in the right sector, it's in the right space. If you read its last earnings, okay, I'm not going to go into all the fundamental stuff, but it's got all the boxes ticked. And so if this breaks out and the market stays weak, or the correction continues, the breakout may fail. But if the market starts trending up again and we get a breakout of this at the same time, then this is a trade I'm going to want to be in. So okay, so moving on. Last week, the main trade I talked about last week in terms of what I really liked as kind of a perfect setup for me was CT1. CT1 had a breakout on big volume yesterday. It's just chopping sideways today, I believe, and so I entered that obviously on the breakout, and so far so good. One of the other trades I talked about last week, ILU, I'm still long. It had this breakout, and then we had the weekend with all the coronavirus stuff, and the Nasdaq and Dow down big on the Friday night, gap down, showed a bit of red, and so now I'm still in the red on this one. However, I've got a bit of a wider stop loss on this. I loved using ruthlessly tight stop losses. However, when with this corona stuff, you're just expecting more volatility. My positions at the moment are smaller. They're like, I'm risking only 0.5% of my account on each trade instead of my usual 1 to 1.5%, sometimes 2%. It's a really good setup. But for Iluka, I just risked 0.5%. I used a wider stop loss down below the support, and so I'm just going to let this choppy stock chop around and do its thing. I'm going to pay very little attention to it. I never look at it during the day, intraday data or anything. I just look at it at night, and that's it. So, and the other one I talked about last week was Bank of Queensland. Bank of Queensland broke out, started okay, and it's just chopping sideways now. So I took a small position on this too. I'm just going to sit with it and let it unfold and see what happens. Okay, so now just moving on to a few new setups that I like. First of all, in the States we have TMDM, which is a big diabetes company. On a weekly chart has this huge base here, okay, which has just broken up out of that. Earnings is in early March, so hopefully we can have a run up. Prior to that, we've broken that range. I've been filled. It's about, I'm probably sitting at break evens at the moment, but I'm pretty bullish on TNDM. In Aussie, I've already talked about APX, and now I'm just going to do a scan. Let's just do a normal DAVA scan, ASX data, and there's just a few other ones in there which I'll point out one sec. Okay, so WZR, it's setting up. I mean, this needs a lot longer for me to get interested in. It's one of these peer-to-peer lending companies that does personal loans for people with good credit history, so they're not payday lenders or anything like that, I don't believe, which I would stay clear of payday lending crap. So WZR is it's setting up and in a Davis box. It's got good volume, good unbalanced volume, all that sort of stuff. I just need that. If that goes soon, I'm going to be not in it. I need that to just go sideways for another week to give me the confidence that it's had a long enough rest before its breakout, but it's certainly one that I'm keeping an eye on. One of the other ones I just find that I've talked about on and off, I think from memory, is one second, and is REA. So obviously anyone that's ever bought or sold a property knows all about this company. They're you can't really survive in Australia buying and selling properties without this company. In the long term, it's just been going up and up and up and up. It's the sort of company that I'd love to just own forever, it's sitting in a new Davis box here. So I'd much prefer to buy this if we had a violent pullback, but it didn't really pull back much at all over the last week or two, and so I'm watching this chop away here at all-time highs, and then I haven't made a decision on that yet, but this Davis scan, it just finds so many of these winning companies which are just setting up. But look, the main one at the moment, the only new setup I'm actually really keen on is APX, and the rest I'm just waiting to set up. Now if we look at if we go back and do a scan of NASDAQ Davis boxes, the number of good setups here is just off the charts. And I'm just going to run through a few. We can't possibly run through all of them. The choice for traders is crazy. Okay, so one of the NASDAQ charts setting up is LPSN. If we look on weekly data, it's just been having this big base here up at all-time highs, and then we've broken out of that small tight pullback and then formed a much tighter Davis box. So that's one. And one of the stocks I talked about a couple of weeks ago, Coop, is also sitting in the Davis box, and let's just quickly find it here. There we go. So Coop, it's come up on this Davis scan. It's just sitting there, and so we have this like base on base pattern now, and I've already got a position here, but probably going to pyramid into that if it breaks up out of that. So now just one more scan. This is a scan I do all the time. Whoops, not this one. Let's just do a tri-point resistance scan on weekly data, all right, on the ASX market. So let's just make sure I've got that set. Okay, here we go. All right, now I do this all the time, as I've said previously, and it usually finds, once every kind of 2 weeks, it'll find just an amazing setup. Okay, and so the scan's nearly finished, it'll be fine now. Now I'm just going to quickly run through it. So that one is useless, that one is, you know, sure, I'll whack that on the watch list, but that's not what I'm interested in. That one, no. That one, no. Sorry guys, I found the stock I was looking for. DWS came up on this tri-point resistance scan here. So now DWS, this is an incredibly tight base here on weekly data. If we flick to daily data, it's obviously a tight range. If, you know, I just whack all the moving average on, and you know, it's breaking out, they're all together and it's breaking out just above all the key moving averages. The only, you know, this stock is in the infotech sector too. It's obviously, you know, you're not going to get rich quick with this thing. It's the resistance up at $1.10 and the depth of that's $1. So, I mean, you're really only risking just over 10%. I mean, standing to make over 10% with this, with the, you know, profit target of that ascending triangle. But you know, it's a good setup. It's a really, really tight base. It's good on weekly data. This tri-point resistance scan finds a lot of these good setups, and you know, this one maybe is not the most powerful, but it's certainly technically a good setup. High probability setup. All right. Okay, cool. Catch ya. Oh.